back to Midcap Radar. Let's invite the management of Medicure on our show. It's a medical devices maker, and the company has reported a nearly 30% jump in profits, and margins too have improved. Note that 60% of Medicure's revenues comes in from exports, of which 70% is dollar denominated. To discuss the earnings and the impact of a strong dollar, the status of the PLI scheme and much more, we are joined by Himanshu Baid, the MD of the company. Mr. Baid, afternoon, and thanks so much for joining in. Revenue growth of 23% this time. Could you break that up? What was the revenue growth in exports, the revenue growth in domestic, and any signs of slowing down in terms of exports, and what was the impact of the currency?
So currently, the domestic business grew around 27% quarter on quarter, and export business grew around 22%. And there was a very marginal impact on the currency, maybe less than 1% on the revenue, because we have also euro and GBP denominated exports. So overall, it kind of balanced out. So I think in terms of currency, hasn't played any major role in increase in revenue, almost negligible.
Not on the revenues, but Mr. Baid, I wanted to understand the margin expansion that you saw this time around. And you had earlier indicated that the second half will see better margins on the back of softening of raw material prices as well. What is the guidance here in terms of margins? 23.5%, is that something that you will maintain, or you'll do better than that?
I think, the raw material prices have started softening in August. And also the freight rates have started softening sometime in August. So I think the final impact we'll see in Q3 and Q4. And I said earlier, I think we are going to maybe see an improvement around 200 to 250 pips in coming quarters if raw material prices stay where they are and the freight rates stay where they are today.
Oh. Any number on the margin front?
Yeah, I'm talking about the margin front, basically on the margin side. From 23.5%, margin, EBITDA margin was close to 23, 24%. So we're going to see that 200 pips improvement if things stay where they are today.
In 2 quarters, by Q4 FY23 end, right? Improvement of 200.
Exactly. So in the next half of the year, let's say in the second half of the year.
Okay. Any signs of slowdown in the export market?
No, I think we have got a good run right now. If you look at the first 6 months, we have seen around a 30% growth in exports. So I think that continues, and I think we have a very steady order book. So we see no signs of slowing down right now in exports, at least on the medical device sector.
No signs of slowdown, that is a good thing. I wanted to understand what is the quarterly run rate that you're seeing in the US, because that's a big market for you, so to say. You are expecting a lot of approvals from the US FDA by the end of this year as well. What will that take your current run rate to? First, just quantify the current run rate and how much can it go upwards by?
See, currently, US, we are doing close to $100 million. It's not a big revenue from US right now. But what we are expecting is some new filings, which we have done, and some new filings will be done in November. And hopefully in 60 to 90 days from that filing, this is a final filing for a couple of product approvals. So if that goes through, I think in Q4, we should get all our approvals and we should start our revenue stream from the US. And as I said earlier, in 3 to 4 years, we're looking at around close to $15 to $20 million from revenue from US markets. And, we are seeing some good traction. A lot of new inquiries are coming from the US because of, I think, current global issues, companies are facing in China. So I think it could be a good, going 3-4 years could be a good traction from the US.
Okay, so the annual US revenues could rise to $15 to $20 million in the next 3 to 4 years from the current run rate of $4 million, right?
A million. Currently it's $1 million on an annual basis.
Okay, I thought $1 million on a quarterly basis.
No, it's $1 million on an annual basis.
Okay, could you give us some more clarity on the new filings which are expected in November itself, and what would the number look like in Q4? I mean, is this uptick? Yeah, go ahead.
I think in Q4 we'll not say too much of an uptake. I think it's going to be a slow build-up. But as the markets, I think once the products are approved, we've already done through all the clinical trials. And these filings are based on the earlier filings, because the additional couple of testings have to be done, which have been now under progress. And hopefully in the next couple of weeks, we're going to file those with the US FDA. So I think, and that's how this is going to move forward. I think it's going to take a while before we step up, but it's a 3-4 year cycle where we see revenues, reaching that $15-20 million milestone.
Okay, so that is on the US markets. What about the PLI scheme investments? You had been talking about a big opportunity here. Investment commitment of 70 crore rupees in the next 6 years, that is from FY22 to FY28. How much of an investment have you made till now, and what has the progress been here?
See, I think in the PLI we had two particular products. One was the renal sector. So in the renal, we have to make an investment of 70 crores. So we are in line with that over 5 years. And this is mainly in new plant and machinery, which we're already doing, expanding capacity. And hopefully by next year, we'll double our capacity for our renal products. So that is going on as per plan. On the in vitro diagnostics also, we are making some new investments, adding some new capacities in new product area. So, and there we have to make an investment of 50 crores as per the PLI scheme. So that is also, going on as per schedule. But these investments are spread over 4 or 5 years. So these are very small compared to what we are doing overall investment. Like for example, this year, our total capex will be in the tune of 175 crores to 200 crores. So already a lot of expansion is happening, in new products and a new enhancement of capacities, even for existing products.
Okay.
But even for in vitro diagnostics, are you on track to achieve the required revenue, which will help you get the incentive from the government?
Yeah. We are in
both.
track. So in vitro, it's an incremental revenue of 1 crore.
Okay.
And every incremental revenue, you get 5% as per the new PLI scheme. But on renal products, there is a certain threshold we have to meet every year to get the incentives.
Okay. Mr. Baid, I wanted to speak to you about your dialysis machine segment as well. Till September, you had sold 140. The target is 500. Yeah. Are you on track to achieve that, or will you do better than that? Because how has October and November looked so far? November, at least, of course, 6 days. But how is October for this particular segment?
See, dialysis machines is an ongoing business. So, this year we have totally we have installed 140 machines till now. But our target is that by end of the year, we should be able to install around 200 plus machines. And next year, our target is to sell around 500 machines.
Okay, so till September, you've done 140. So you expect only more 60 to go in the next 6 months. Is that what you're saying?
Yeah, because we are building up the whole project. See, right now, it's a slow start. It's a new product. And, it needs a lot of testing right now. So we will sell around 60 to 70 machines in this current H2 period. But then going forward, we'll scale up because we are setting up the unit to scale up production for dialysis machines now.
All right. Mr. Baid, it was a pleasure speaking with you. Thank you so much for joining us and giving us all those details. So that's the word coming in from Poly Medicure. Strong set of numbers, and they expect to continue.